Hello and welcome to CIEL's classroom. What we're going to do is to clarify a few concepts that help you follow all the news around you about the repo rate cut that RBI announced last week. The repo rate is not any bank's lending rate or borrowing rate. It is RBI's policy rate, which RBI uses to signal to the market its own stance for increasing or reducing the interest rates. This is also the rate at which RBI is willing to lend to banks. At the end of a workday, if a bank falls short of funds, it can go back to RBI and borrow at the repo rate. So it's more like an accommodation by RBI to the banks. The rate that RBI offers here is what has been reduced by 50 basis points on the 17th of April. However, the rate that banks pay for deposits is not the repo rate but the rate that it offers on its own deposits. Therefore, whether a repo rate cut will mean a cut in deposit rates or a cut in interest rates depends on the bank's own balance sheet. What we know is that RBI has signaled for all interest rates to begin to reduce. It's now up to the banks to pass this on to its borrowers. When we are asked whether banks will start reducing interest rates because RBI has reduced interest rates, we hear the word transmission so often. What is transmission? When RBI cuts the policy rates, banks may not immediately respond to this signal. The process of passing on this rate cut to the final customer is called transmission. Interest rate on a bank loan has to be higher than the interest rate that the bank offers on its deposits. This is because to be profitable, the bank has to lend at a higher rate than it borrows. Therefore, banks have to cut deposit rates before cutting lending rates. Now, banks may not be able to cut deposit rates when investors are unwilling to accept low rates given the rates of inflation. Banks may also find it difficult to cut deposit rates when they are short of funds. We know that the daily borrowing from RBI is about 1 lakh crore. This indicates that banks are facing a liquidity crunch. So while the government and the RBI are persuading banks to reduce interest rates, they may not be yet ready to match the 0.5% cut that RBI has announced in order to protect their own profits. So what are banks likely to do? Banks will have to reduce interest rates on both deposits and loans. It's only a question of time. But to begin with, the extent of cut is likely to be lower than the 50 basis point or 0.5% done by RBI. Banks also are unlikely to change the base rate below which they cannot lend because reducing the base rate will make most loans cheaper. Instead, they may be very selective about reducing rates for specific loans. Now, most of us care about home loans and we want to know whether home loan revisions will happen. Perhaps this may take a little longer because home loans are typically for a long tenor. Shorter tenor loans may be offered at a lower rate before home loan rates are revised. What also happens in a competitive scenario is that banks will wait for cues from big players. SBI and ICICI Bank have already reduced interest rates. This means others will soon follow. We need to see that loans and deposits are very closely linked and their pricing also has to be linked. Therefore, if we are looking for a lower rate of loan, we should also prepare for a lower return on deposits. We'll now consider the last slide on what is in it for you in the repo rate cut announced by the RBI. You should surely expect interest rates on bank deposits to begin to come down. Should you have an opportunity to book a long term deposit at the current rates, you may like to do it so you can lock in a high rate when it lasts. If you have a housing loan, your EMI tenor or the amount of loan is likely to reduce after a while. You can also scout for lower cost loans because banks will be competing to acquire these assets. Banks may find it difficult to manage fixed rate deposits because rates are falling, floating rate deposits may be more attractive. However, wholesale depositors have always resented floating rates when interest rates are falling, so we do not know whether this product is likely to happen this time or not. The real estate industry and builders have welcomed the RBI's rate cut. They think that housing demand will come back and they don't have to reduce prices. You may be able to still buy a home at lower cost and at a lower interest if you waited a bit longer. This, however, depends on whether the real estate business gets funds or witnesses an increase in demand. If there's an increase in demand, the prices may go up while your loan rate might be lower. If there is no increase in demand, you may get a double benefit of a lower cost loan as well as a lower cost housing. Reduction in interest rate is primarily intended to encourage consumption. The economic revival that RBI would like to bring about depends on whether you would bite the bait and begin to consume and demand goods and services at the now lower rates. It's your turn to be wooed.